All right, everyone. Welcome to the Futures Live Day Trading Forecast for Friday, December 1st, 2023. It is the start of a new month. I'm excited to look and see what we've got on the table for today. Remember, we've got the ISM manufacturing coming out at 10 a.m. That's a huge announcement. That's one of the only news announcements that are really viewed as a leading economic indicator. A lot of the other news announcements are looking at things that have already happened, whereas ISM is super important because it gives us real-time information in terms of the strength of the economy. So this is going to be a market moving number, which is another reason why I haven't put out the forecast earlier today, because I'm not really planning on trading until just before that number. First of all, we've got to go through the forecast, pick our favorite market, and then wait for ISM, because it definitely is going to move at least the stock indices, the ES, NQ, the Dow, the Russell. It'll definitely move the treasury space, the 10-year, the 30-year, the ultra bond, gold, silver. So we got to find the best market possible to trade for when that number comes out, because we want to try and take advantage of it if we can. So that's really important. The second thing is we've got Powell speaking in a fireside chat at 11 o'clock. I hope he doesn't get burned. I hope he sits far away from the fire. Powell, sit back away from the fire. Important. God, these Powell meetings, oftentimes they're just, sitting around basically talking about everything we already know. They're pretty pointless, but for some reason they do move the markets, depending on what he says. So really today, what we're looking for from Powell, we're going to see if he's happy that the other Fed governors the last few days, some of them have been talking, more dovish. Some of them have been talking more bullish. So we're going to kind of get a sense of where Powell stands. Is he siding with those who are dovish or those who are bullish? So that's also going to be moving the market. So the party today is really going to get started at about 10 o'clock with ISM, and then follow through with what Powell does at his fireside chat at 11, which is why we're getting a little bit of a later start, because I don't want to sit here and trade this market right now until the fireworks really start, being set off at 10 a.m. with ISM. All right, so with that as our precursor, what we're dealing with today, we got to know what we're dealing with. Otherwise, what's the point? We got to prepare. We got to first see what we got on the fundamental landscape. What do we have in terms of news? Is there a central bank, president speaking? These are really important things to know, and then go into the actual charts themselves, which we're going to do right now. So let's go ahead and check this out. You can see the monthly chart here for ES, the S&P 500 futures. Big move up. Yesterday, the forecast actually turned out to be correct. I called support. You can go back and watch that video. Called support down here. It just went lower than I thought for longer. So I took two trades, one small loss, one small win. But when I could see it wasn't going to be one of these off to the races, upside moves like we had on Wednesday, then I just basically stopped at break even. I said, I don't know what's going to happen the rest of the day. Support, it might hold, but right now we're digging deeper into it than I would have liked. So I'm out of here. And that's really important, is go into the day with a game plan. You want to get in, execute your game plan. Hopefully it works, get your money and get out, exit the casino. It's so important. So yesterday, when I could see that the first two hands that I played, if you want to look at that casino analogy, I have one small loss, one small win. I was following my trading plan, my preparation, which is fantastic. I was really trading the processes, which is what we want to do every single day. But when I could see, I'm not really sure what's going on here the rest of the day, boom, just out of there. No need to sit and force it on a market that's not cooperating. So I can't stress that enough. It's so important. It's taken me a long time to learn that. I know a lot of people, had some difficulty trading yesterday, and don't kid yourself. Why? I mean, these markets are tough. Look at the last 7-8 days here on the E-mini S&P 500. I mean, this thing is just in a wild range, right? So today, what are we planning for? Well, we've got a pretty nice resistance pattern up in here on the daily. You can see we're in this range. Here's the daily resistance level. We're in congestion. There's the daily support level. We know, what do we do in congestion, right? We cycle back and forth, and that's what we're doing it, albeit very violently, and it is super volatile right now in terms of this congestion. Sometimes they're easier to trade when it's a little bit more, orderly congestion, so to speak. So we're coming out of resistance right here. Nice little pattern up there into resistance. Question is, are we going to cycle back down to these lows? We certainly could. You know, the monthly did hold that extension here on close yesterday, the last day of the month. You've got the live congestion resistance trend line there at about 4,600. So, I mean, the yearly and the quarterly charts still look very, very bullish, but this monthly looks like it might be due for a little bit of a breather. The weekly is still, you know, it's still pretty bullish. The question is, you know, does it just need a little bit of a pullback here, you know, today to maybe set up a nice little weekly pullback pattern here to set up potentially a push up next week. I could see this happening. I don't know for sure. Obviously, I wish I had my crystal ball. I don't. But if the weekly pulled back into this pocket, and remember today's Friday, is the last day of the week, so this close today is going to tell us a lot. But if we do pull back into this weekly pocket, that would set up a really nice potential to push higher next week, because you'd be right at the monthly true average support right here, which would be right where the weekly pullback could potentially be going. You've got an extension there. I mean, you got a lot of support there at 4,500, and we may just want to go back and kind of test that support out. So I don't know if we're going to get there today. It's really anybody's guess. We may push higher today and challenge up and through 4,600. It's really difficult to read when the market is this, you know, overstretched. So that's really important, is when you're doing your analysis, and if it's not clear, then you just have to exercise a little bit of extra caution. Don't force the issue, right? That's super important. But today, I think right now, and we'll get a much better idea of where we stand as we go through all these markets, right? Because we want to see, what do the stock indices look like? What do the treasuries look like? What do the metals look like? You know, what does the energy space look like? What does the dollar, the currencies look like? The commodities, all these things are being looked at together as a package. And then we make our determination on which market we like the best based off of the overall picture. And a lot of that is influenced by, you know, is risk generally on or generally off? You know, all those little variables do come into play. So let's go ahead and see what we've got here for the NASDAQ. We'll flip on over to that. And on the NASDAQ, yeah, you can see we're leaking lower. Stocks look weak to me with that monthly close. That, you know, the fact that we came out of all that resistance up in here and then went back to support and couldn't really, even though we held it on close, now we're starting to leak down and through. So NASDAQ looks weak today. No pattern though, but it does look weak, but we'll see. The Dow, wow, just a monster move on the Dow there yesterday. Whew, didn't see that coming. I mean, it looks like an exhaust. So the Dow, I mean, that's a big move. So that could pull back a little bit today. Definitely an exhaust pattern there. You've got a huge bar up, massive volume. You know, that's usually an exhaust, especially at the end of this trend, right? So you're trending, and then boom, there's your exhaust. So I may be interested in shorting the Dow today. We'll see with that exhaust. And that monthly looks very overextended right now, back at those highs. We may want to go, you know, back down to the true average there. And also keep in mind that the ISM is a manufacturing number, right? So the Dow is going to be extra sensitive to the ISM. That's really, really important. I mean, all the stock indices will be, but the ISM, I think, will be particularly impactful on the Dow. So may go short the Dow. We'll see. The Russell coming out of resistance. Yeah, looks weak as well. So at this exact moment, before looking at anything else, I'm going to say stocks look, you know, the opportunity today might be to short stocks on pops into resistance. I'm not ready to make that call yet. Let's go through the rest of the markets. But that's what it's looking like just by looking at the 4 major indices. All right, let's go ahead and look at the 10-year, look at the treasuries here. So kind of pull back into a pocket. You've also got a bit of resistance here. But we may need to head back to the, you know, these dots down in here, the middle of the moving average envelope at 109. Yeah, no real read there. You know, we're pushing higher on the daily. Sure, you've got a little bit of a pullback, but, you know, it broke the middle of the moving average envelope. It broke the extension, which I can draw here for you. It's an important trend line. It broke that, especially when it was right at the middle of the moving average envelope, that green dot. So the fact that that couldn't hold, push back up and hold on close, that's pretty telling that I think, bonds are looking weaker here, which means rates might push higher here, which means stocks could push lower because of higher rates and lower bonds. See, this is how we connect all these different charts together to try and get a very clear idea of what's going on. And sometimes we do all this and then we still have no idea, and then we just don't trade those days. Those days aren't very fun, but sometimes you gotta know when to hold them, know when to fold them. Important. All right, let's look at the 30-year. Yeah, the extension there did hold on the 30-year. So that could potentially, push back. But see, now we're right. We're under these key weekly resistance trend lines. Kind of a mixed bag there. Let's go ahead and look at the Ultra Bond. Ultra Bond looks stronger than the rest, but I'm still not liking it. Just we're gonna have to get more information here. What's gold doing? Yeah, you see, I think this is what we're seeing this today, right? Where like, even though you get that pullback in gold, and that pullback can sometimes cause, the push back up here, right? We're already coming out of resistance, which tells us that if that resistance on gold is going to be strong, there's a chance that the resistance on treasuries is going to be strong, which means rates are going to go higher, which means stocks are going to go lower. That's at least what we're seeing heading into ISM, which is coming out in about an hour. So it's tough to say. I mean, the gold trend run to the upside on the weekly is certainly not, long in the tooth by any stretch. It's not like we've been, trending up for that long, but we've still gone from 1960 to 2080 in a few weeks. So, because you always want to ask yourself when you're buying a pullback on the daily, you see this daily has been trending up for a little while, right? Look, all this, and is this the beginning then of the daily working toward a pause and congestion, right? Because you don't want to get caught buying the trend pullback when it's, overextended. And sometimes that's very difficult to tell. All right, let's go ahead and look at silver. I mean, still trending nicely there on the daily. Not really sure if it wants to pull back or not. Let's look at copper. So copper is pushing higher today. Interesting. Let's look at crude oil. I mean, you've got a nice pocket support there on big volume for crude oil, which could firm up that 75 level, but it also really just depends on the weekly here, right? And the weekly is still trending down. Sure, we might, today might be a massive move up on oil, and then the weekly would enter congestion up, but that's a big if, right? That would have to happen first. So we're gonna have to wait on that. Let's look at natural gas. Like I said, this could be an exhaust on the monthly chart for natural gas, but still too early to tell. Gonna leave it alone for now. Let's look at corn. That's potentially a nice little monthly support pattern there with corn. You've got these trend lines coming in here. Depends on where this weekly closes. Certainly the daily is a strong resistance pattern right there on corn. I'm not going to short that. I do like where this is at in terms of the weekly, right? Because see, the weekly is definitely weak, right? And you do have a really nice pullback here on corn right into that resistance level at 484. But usually I like to see that on a little bit bigger volume to go short. So probably going to pass on corn. Let's look at wheat. Not really clear there on wheat. Let's go to soybeans. Soybeans are already pushing lower. So you can kind of see that with corn and soybeans, and wheat's already down to 1%. I mean, we don't know where these are going to close today, but commodity, the food commodities lower. stocks lower could be pointing to, continued pressure on bonds, which means upward pressure on rates, which means downward pressure on stocks. The key is going to be the dollar. That was the key yesterday when we were in the live trading room and I was going over my trades, showing you how I execute and how I manage the trades. I kept paying a lot of attention, even though I was looking to go long the S&P 500. As the day wore on, 10:30 a.m. Eastern, I was looking at treasuries, I was looking at the dollar, and I wasn't seeing a super favorable picture there, which is why I left and I didn't trade anymore, which I think was a good decision because sure, stocks did get a huge rally right at the close, but that's you don't know that you're going to get that, and that's also, I don't know, at the close is a little bit more of gambling than I like to do. I think the open is much more reliable in terms of probabilities. The close just seems it's a lot of book balancing and things get real crazy. Sometimes you get these huge spikes, sometimes you get the crashes. They don't necessarily match up with the technical analysis. So I'm not a huge fan of trading the close. Just a word to the wise, very important. Don't trade the close. I mean, if you trade individual stocks, sure. And you know exactly how that stock moves at the close, you can do that. But futures, look out at the close. I would really not even mess with them. The indices I wouldn't mess with until, really after 11. Sometimes you can get a decent afternoon action between like 1 and 2:30. But then after that, call it quits. Just, that's a friendly piece of advice. All right. Look at the euro. I'm telling you, because I've lost a lot of money over the year trying to figure out the close. It's very difficult because it just, all the order flow, all the logic, all the levels, they kind of just go out the window at the close because of that, rebalancing in the books. So it's just important to realize that. All right, so here you can see this is the telltale. This is what we've been waiting for. The dollar is continuing to be strong here. Broke, against the euro here. This is the euro futures, right? So you can see right here, not only do you have one extension support that broke on close there, you got 3 of them, boom, boom, boom. And now, since that was a really strong support level yesterday that got slammed through, what should it do today? It should flip and become resistance, right? Because resistance, when broken, becomes support. Support, when broken, becomes resistance. So in this case, that key support level that got broken is now resistance right at the true average, and it is pushing lower, which means dollar strength. So, with this recovery in the dollar right now, this could also be the start of some kind of a liquidity crisis or beginning liquidity problems, because we're seeing that the bank balance sheets are not looking good. They're really tapping into that Fed, safety lending facility that the Fed set up. That's coming, I think it's going to expire, at least the initial terms, I think in March of 2024. So this could be the start of, some kind of I don't want to say black swan, but everything else right now is super rosy. Stocks just had a big move up. Everybody thinks we're back, we're off to the races to the upside. That doesn't mean that that's not necessarily going to, unfold that way, but might we experience a decent little pullback in the meantime? It's kind of looking more like that to me right now because of what we're seeing in the dollar, treasuries, and stocks. So let's go ahead and look at the, I want to look at the dollar index. We'll look at the dollar index here. Yeah, it also broke on close, really important. So that's good. All right. So I think what we're going to have to do is focus on ES to the short side, I really do. Normally on a day like today with ISM, I would prefer to trade something like the 10-year, believe it or not. I love to trade the 10-year only on huge news announcements like FOMC, non-farm payrolls, ISM, some of the inflation reports. The 10-year is a great instrument to trade because it's so thick. So you still get that crazy movement on the news, but it's a little slower. You have that extra split second to react if you see something good, and you can hammer it on the 10-year, which is why I like that. But today I'm not really seeing, the pattern that I like on the 10-year. So we're going to have to go with the S&P 500. And basically, we're looking for some follow through back down to yesterday's lows. That would be the first stop. And, look, I'm going to go into today with the same game plan that I went into yesterday. Yesterday, I was bullish because of the support, and that ended up ultimately, being, I don't want to say correct, but the right forecast. It just didn't materialize in time at the open like I wanted. So broke even on that day. I was very happy about that. The day before, made 700 across 3 accounts. No, 7. So it was like 2,200 total on the challenge accounts trading the Russell, because we had a game plan, we prepped, and it just unfolded exactly as we thought. So those are the days to really, hammer it and go and get your money and get out, right? Whereas yesterday, it wasn't acting the way that I had prepared for and wanted it to act at the open, which is why, very happy to get out of the break even. Today, we're looking for sort of the reversal. We're looking for, resistance to be strong into 45.80-ish. And then we want, we want to short and head back down. So maybe we're going to see a mirror of yesterday. You can see the patterns are pretty similar. So yesterday, what happened? We fished a lot lower before then firing higher. So today, what will be great is that if we, fished higher, get short up here somewhere, 45.80, 45.90, and then it reverses lower, that would be nice. So certainly, if we got a good pattern and a pop on our intraday volume charts, which I do monitor when I do my own trading, I record that, I post it for you guys. So if I get a good pop at the on the back of that news up into resistance, and my intraday charts are telling me, hey, there's a good chance resistance is strong up here, and that could be a good low risk spot to try and short for a big move back to the downside. We'll have to see. You never know how these announcements, how these news releases are going to affect the market, but that's something I always like to look for, is that pop after the announcement and then the reversal, because oftentimes the market loves to just pop the wrong way and then reverse hard the other way. So I always like to look at it from that perspective. You never want to trade breakouts on news announcements. Not a good idea. They reverse the majority of the time the initial pop after the news. Keep that in mind too. All right, everybody. So that's the forecast. That's what I'm going to be looking for. It's going to be the S&P from the short side. And, if we start to get up and through 45.90, I'm not just going to start chasing long. I'm just not going to mess with it. Just like yesterday, as we started to leak lower, I didn't want to mess with it. So that might happen today. You got to know, when the markets are cooperating, when you really like the price action, it's clean, you prepared for something, you're coming into the day ready to go, and the market does what you thought it was going to do. Those are the days where, things are clear, you put on your size, and you really, you want to take a spin of the wheel. Those are the days. But if it's not acting the way you thought it should act, according to whatever type of methodology you use, then just go away and come back another day. I think people are over trading too much, trying to force, their will on the market. Got to make money today, so the market's got to give me that money today. That's just a wrong attitude. It's the wrong mindset. And I see a lot of these channels out there right now, like really cool guys on YouTube trading live, and good on them for doing that. It's really cool that they're doing that. But they're scalping, and scalping. I'm going to do a whole video on scalping. It's going to be a very short video because it's not going to be a pre-market prep video. But with the scalping, it's not necessarily that scalping. Sure, it's harder because it's faster and all that, and there's more noise. So you get the compounding effect. It's harder, but it's not the technical difficulty that makes scalping super difficult. It's the mental difficulty with scalping. You're going to overtrade when you scalp, right? And when you overtrade, you're going to get FOMO, because scalping leads to overtrading, which leads to FOMO, which leads to blowing out your account. And then you blow out your account, but you also blow out mental capital, right? Because you blow out your confidence. It's just not a good situation. Nothing good can come out of scalping. I've been around a lot of professional traders, and not one of them is a professional scalper. And so if you want to be around for the marathon and not, the sprint, then I would stay away from scalping. But that's just my 2 cents. Take it or leave it. All right, everybody, take care. I'll post how the trading went at the end of the day. Bye-bye. Good luck today. Be careful. The charts are, things are not super clear right now. So I'm going to go short the S&P on a pop. But in terms of the clarity index, I think it's more of a be careful day. So just put that in your pipe and smoke it. All right. Take care, everyone. Bye-bye.